thank you for inviting me. This is a topic that I love to talk about because it's something that I do every day in my job. So obviously I work for a company that kind of thrives on product-led growth, and it's safe to say that Calendly wouldn't be where it is today if it wasn't for that type of motion. But there's always something that we have to do as product managers, and that's figuring out what's after that, right? So really, what's the button? Oh, that's the button. So this is the thing that I kind of want to build around, is that everyone knows this topic or this phrase: if it isn't broke, don't fix it, right? And that does apply to a lot of things in life, but when it comes to business and software, that really doesn't hold water. So, what works today in your business doesn't always work, maybe in a year, maybe in 2 years. And if you let it go long enough, this is what happens, right? You've done the hard work about finding product market fit. You've done the testing, and your competition is quickly following you, right? And I don't want to be a downer on product market fit. I mean, who here actually thinks that they've hit product market fit? Yeah. So, I think it's worth celebrating, right? That's a milestone to hit. And once you hit it, you start seeing this giant increase in revenue, right? Everyone's really happy. Everyone's getting bonuses. People are excited about where you are. But then the reality starts to hit that your competition's really coming up behind you. Maybe a competitor has done something that you've done a little bit better than you. Maybe Google has built the same product, but for free. So how do you sustain the growth that you've started to see once you've hit product market fit? And that's where we were at Calendly. So we had successfully delivered one of the most influential scheduling products in the market, right? It's something that was really easy to use. Like a lot of you've probably used it in your life, whether it's to schedule a meeting with a recruiter or maybe even like or meeting with a gym member or with someone at your gym, or whatever it is that you've used us. You've seen this. You've seen us kind of do well in this area. And our brand recognition was great, but we had a lot of scheduling link providers coming on the market. So we had to start out to think, what do we do about that? What's next for us? Now, the good news is that we're doing quite well. Calendly has done great at pivoting what we are doing. It's not just scheduling links anymore. It's scheduling automation. It's integration with CRMs. It's building scheduling into your business. But we're well aware of what our competition is doing, and they're coming right after us. So otherwise, we're pretty good. Now, just to give you an example of where we were on the product growth curve, we saw that rapid acceleration of growth once we hit product market fit. And this is obviously a number of years ago. But just recently, we're starting to hit that pinnacle of this chart. Right? So for every business on the planet, we're going to mostly follow this chart. Now, at some point, once you get competitors in the market and they're starting to dilute the market for you, and there's obviously other factors economic-wise, you start to hit what we call the saturation ceiling, right? Where more investment that you put into your existing product is not going to return investment for you. So it's good to understand where you are on this trajectory. And so we were up there. We saw that there was an opportunity for us to take another step forward and figuring out what comes to move that saturation ceiling up. And so we had to make some business decisions. And we were thinking, okay, now what? What direction do we take? Now, there's obviously a lot of ways for us to grow the product, right? It could be we could adapt what we currently offer for a new set of people. We could launch a complementary set of products for the existing market, and we could also maybe acquire another company or add a brand new solution to the use case that grows the market horizontally. So obviously, to go through all of that today would be a very long presentation. So I'm going to focus on just one, and that's just how to adapt your product and what you've done so well at, and actually satisfy what we call the upmarket or the enterprise, if you will. So some of the questions I want to answer today are: why take that approach? Why not the other two? And how do you know it's the right time to take that approach? And what's involved in making this move? And then lastly, what can you learn from those before? because we're not going to be the first, and we're not going to be the last to actually do this. So broken up into 4 sections. The first is I want to quantify the market opportunity for you, just to see is it worth going after. And the second is I want to talk really in depth about what the enterprise plan really means. The third is kind of looking at the leading indicators, the things that will tell you that it's time. And then lastly, preparing your business because it's not just a product-led motion. So the first thing is market potential. So I do want to try to quantify this as best as possible. And so if you think you know what enterprise is, typically that was larger companies, like 1,000 or so or more employees, but that term has broadened. And so now you're starting to see the influx of small and medium-sized businesses that act and buy like larger companies, so 100 employees to 250 employees. Not a lot of revenue, but 10 million revenue. And they still act like those larger enterprises. So it's no longer just the SMB market, it's actually small and medium-sized enterprises that want that type of plan. Now doing business with these types of organizations definitely have a financial benefit to you. You start to see multi-year agreements, which will extend your runway. And because you're starting to get larger and longer term contracts, this is very attractive if you ever plan on raising more money, going through another series round, or even going IPO, right? So having that type of contract will help convince those investors. And then the typical annual contract size of an enterprise buyer is anywhere from 3x to 100x. Now, obviously, that's a really big range, and it really depends on your business. But it's safe to say that having this type of motion in your business is drastically larger than what you're currently doing. Okay, so let's talk about the enterprise plan. This is actually kind of funny. So when I was creating this presentation, this slide was actually it came in the package. I didn't have to do anything to it, so it's kind of funny. But it illustrates the point that a lot of businesses operate in this model, right? They have like a 1, 2, and 3 paid tier, maybe a free tier at the beginning, 2 paid tiers, and then an enterprise plan that says contact us, and the pricing is not transparent. But this is very typical of what you'll see, and what's in that plan is very different between businesses. So what I like to say first is that a lot of companies create this plan too early. Basically, they put that there so that they can market themselves as an enterprise-ready product, but they do it too early and they can't execute on what is actually laid out in that plan. And so maybe it's like there's not enough security controls, there's not the permissions of what an admin can do versus a lower admin can do aren't enough. The premium support actually isn't 24/7. And there's not enough people to actually answer the questions that the legal and the security teams on the customer side need you to answer. And a lot of companies will start by creating this plan with something called a security tax. And basically they just put single sign-on in there, and that can actually garner some negative reputation because basically security is now baseline in SaaS. So that's an important thing to be aware of. You don't want to be on the security tax list. There is actually a list out there if you're not aware of it. Don't want to be on that. The other thing that's very interesting when it comes to the enterprise plan is there's not enough differentiation between plans. And so when you start to have companies ask about what's in the next tier, what do they get, and they only see one thing in that plan that's tangible, which is SSO, they start to feel gypped a little bit. So differentiation is a big thing in this. And the thing that a lot of people don't really understand is that once you start getting larger deals, it starts to overwhelm your roadmap with bespoke asks. So you can think of a large company paying a lot of money to you, much bigger than your other customers, and they're saying, hey, I want this feature. They're going to start pushing their weight. So my recommendations here within the enterprise plan is that before you offer one, the first thing you should do is perform an enterprise-ready audit. There's a few things online that you can do to find out where you are in this, and it's not just a product thing, it's an operational thing and a support thing too, but it's just to assess where you are and to say, is now the appropriate time as a business to offer this plan? The second thing is ensure that there is differentiation between plans. If you can offer an unlimited kind of measurement on some parts of your product in the enterprise plan and then lower or actually put caps as you go down the plans, that's helpful, right? Because it shows that as you get up to that next tier, you're able to provide value. We also want to align the business towards this goal as going up market, because you don't want to get in a position where the product is saying, I'm enterprise ready, but the business can't support that, right? You don't want to get in you don't want to have a bad reputation of not being able to support your customers at scale. The last thing is time the launch appropriately. And I think that's the most important thing, is make sure that all these other these areas are handled and you have a good perspective on them, and then time the launch to market appropriately. Now the bottom line here is that it is necessary. I think that most companies in the SaaS market are providing a enterprise plan. It's the way that companies buy, and they do kind of expect certain things in them, but it is appropriate to figure out, is this the right time to offer one? All right, so let's talk about leading indicators. What's going to tell you that it's time? And it's really important to know when. So the largest leading indicator that you can look at in your business is the win rate by customer segment, and the time to close. So at Calendly, we saw a complete drop-off when it came to win rate past a certain threshold. And then we saw a dramatic increase in the time to close. And so those are the two indicators that we saw and said, okay, maybe that's telling of what we need to change in the business to support them. The other thing is assess where your opportunities are coming from. Are they inbound or are they outbound? Are you actually going after these companies, or are they coming to you and asking? And so once your product, if you're in the PLG space and you're using the product virality to grow, once that product virality tips over into the enterprise, those customers are going to start asking you for what you can offer to help the company at large, rather than that's one small team. Now, once you start having conversations with these larger companies, you're going to get 3 new personas that are going to start asking questions outside of your stakeholder. The first is going to be procurement, and then you have the security and the compliance teams, and sometimes they're combined. But those are the 3 new categories of buyer persona that you have to cater for that are really outside of what your product does at the core. And for us, when we started doing this, we were struggling to answer these security questionnaires. We were struggling to meet the needs of procurement and kind of modify the legal agreements that they wanted us to modify. We just couldn't handle that load. And so this is not, what I would like to end with is this is not an isolated incident, right? This is something that will continue to happen over and over again. So definitely don't make a decision off the first time you see this. But if this is normal, if you're seeing this over and over again and it becomes a trend, that's a good indicator that it's time to probably shift the business to start supporting these larger companies. Now, to bring it back to what we did at Calendly, and just from a timeline perspective, to give you an idea, is that we didn't introduce an enterprise plan until 2 years ago. So we were operating on the PLG model for 8 years, and then we decided, okay, now these leading indicators are telling us that we should move, now we can offer one. Now, there's some benefits that we see by supporting these people. And one is that we do have those larger and longer term contracts, and that's really, really helpful from an ARR perspective. But we also have these larger logos that are actually giving us more insight into how larger teams operate and what their type of scheduling needs are, rather than the one-off or the individual type of scheduling that normal day-to-day users use. There are some drawbacks that we've seen, is that when we launched, there was a lack of differentiation. It did create a lot of confusion. We ended up in that situation where we only offered single sign-on in the enterprise plan. Now, we've since shifted from that, but that was something that we started with and definitely saw pushback from our customers. And the last thing that we have seen from a negative side is that we do have some larger companies that are starting to try to push their weight, and they're trying to influence the roadmap. And we're trying to navigate that as best we can. So those are the pros and cons of what we've seen at Calendly by launching an enterprise plan. So if you're still with me, if you're still thinking about doing something like this, I want to talk about more of the business side, not really the product side. So what do we need to prepare the business for? So I talked about those other personas that start to get in, and those type of personas like information technology and procurement, they're going to expect a little bit more. They have their own needs. And specifically for IT, they're going to expect a level of trust with you. They're going to expect that you have security certifications, that you are handling their data properly, both for their own purposes and for privacy regulations. So SOC 2 and the ISO certification are very necessary to have, and gives comfort to your buyer. And then privacy regulations like GDPR, and now we got, I think, 3 in the US and more to come that you have to adhere to. They're going to expect single sign-on. That's a given. But they're also going to expect a way to make sure that single sign-on is enforced, that people can't go rogue and sign up with their own accounts and go outside of the enterprise organization. They're going to expect an easy way to onboard users and offboard users as they join and leave the company. They probably expect an easy way to test out your features before they can push it to production. They're going to expect some differentiation between roles like admins and lower level admins and maybe some customizations here and there. And if you're doing any sort of business in a regulated sector, they're going to expect specific needs on that side too. Now, for procurement, a whole different beast. They're going to expect some customizations when it comes to your legal agreements. They're going to expect you to compensate them if you don't meet your uptime. They're going to expect different billing options, right? So maybe it's departmental billing or cost center billing by invoice rather than billing by credit card, and also maybe true-up billing if you're doing a usage-based model. So the key word there is just being flexible with that type of persona, because they're going to expect it. If you have hard and fast rules with your contracts and your billing, it's probably not going to fly with that type of a buyer. But the main thing is, don't forget about the key stakeholder that you were already working with. Don't forget about the users that use the product from a day-to-day basis and are going to be there after you satisfied IT and procurement. These are the people that will use the product and have been using the product, and they're going to be there long after. So they're going to want a way to operate independently, right? So if you're thinking about an enterprise and you're bringing a lot of different stakeholders together, for us at Calendly, you have recruiting teams and you have sales teams. Can you imagine the different use cases that they have, and you bring them into one organization? They have very, very different needs. So we need to have a way that they can operate independently while staying under that umbrella of enterprise. They also want control over how they operate. They don't want someone telling them what to do, so they want to be able to control how they operate as a business. They're going to need to onboard a lot of users at scale. They're going to need to get value quickly. You don't want to just leave it stagnating. You want people to use the product, and you want to manage data in bulk. Whatever objects you have in your product that you need them to utilize, and you want to get it to those users, it's a lot easier when it's 1 to 10 people. When it's 1,000 people, you need bulk ways of operating. So if you can do all 3 of these things, if you can satisfy IT and you can satisfy procurement, and you can build the tools to onboard users and activate those users and just make sure that they peacefully coexist, then you'll be successful moving up market. Now, the last thing is probably the last thing anyone here when we're talking about product-led growth wants to hear, is that there is a natural progression into sales-led growth, right? And what I would like to say is that there is a way for these 2 things to coexist. And we're doing it very effectively at Calendly. But the main benefit, or one of the main benefits of doing this, is that it gives breathing room to the people that were already doing the heavy lifting, right? So if you're moving into the enterprise space, a lot of the product managers, a lot of support are answering the questions that the sales team could probably have answered for you, or a sales engineering team could have probably answered for you. The other thing here is that upmarket growth is not just a product strategy. It's a business strategy. It's primarily a go-to-market motion and how you present yourself to the world. And so everyone needs to be aligned to that. And sales really helps with that. Once you start to incorporate sales-led growth into your product-led growth strategy, you need to start focusing more on value selling. Sales starts to get into this roadmap selling type of mentality, and that's a really bad way, of going about this. It actually really hurts the culture. And I think it's really important to focus on value selling versus roadmap selling. So if you can avoid it at all costs, please avoid date conversations. The enterprises will latch onto those dates, and they will try to hold you to them. The other thing is to align the sales strategy with the product strategy. So the example here is that if sales wants to go after the insurance market and they think that there's an opportunity there, and they think they can grow it by 50%, what can product do to help with that? What kind of research can they do? What kind of features and functionality can they deliver to help facilitate that 50% growth? And lastly, as your sales team grows, it's really important to educate them about PLG, why the people are even coming to you in the first place to ask about the enterprise or even larger team type plans. PLG is what brought them here. So it's important to educate them about that and keep that culture alive. So, like I said, we're not going to be the last ones to offer an enterprise plan. So I just want to leave you with 3 final things. The first thing is, if you can avoid it, don't go after the whales. Right? They're very enticing. The money is very, very enticing. But I can assure you that what feels like a yes, if they say, please deliver me X feature and I will just buy, it's not going to happen. It will snowball. Now they've got their hooks in you. It's very likely that they will start to push their weight. Grow with your customers. So if you're going after 100-seat customers, stay in that lane. Then you can grow into 200 and 1,000 and so on. Don't go from 10 to 1,000. Second is set boundaries. I think this is a really important thing as a company to do, especially if you're going to go into an enterprise market, is that you need to set boundaries about how you're going to decide to prioritize the features and functionality that those customers need. And if you can make that known to your sales team, that will create a really good relationship between them as well, and they'll understand how decisions are made. And lastly, get really freaking good at customer discovery. And if you can do that very well, if you can understand what the pain points are at scale, if you can understand what the customer's problems are, then it's going to help 1 and 2 really well. And it will take practice. It's not easy to understand all the needs of larger enterprises. Again, when you're talking about multiple departments, they all have different needs. So bringing them together, making them coexist, is going to take some practice to understand. So based on that, good luck if you're going down this path, and thank you. Oh, I can see it down here.
I think some of these are still from the last session.
Oh, they?
So you'll have to I don't know if Ruth's back there, maybe clearing some of them off. Let's see.
Sure.
As you said that going from 10 to 1,000 is seriously risky. Isn't that against the startup culture where you're chasing growth as soon as possible?
Yes, it's very enticing to go after that growth as soon as possible. But I think there's some diminishing returns if you start to go after the whales too early. I think one of my early points was, I forgot what it was, but you'll start to eat up your runway with those customers. You only have a limited time and a limited set of opportunities with larger companies, right? And so if you bring them in too early and you can't satisfy what they're looking for, and you can't maybe answer all the questions with a yes on their questionnaires, and you can't answer procurement's needs, it's going to be really hard to get them back. So if you can grow with the customers, that's better than trying to grow rapidly, because it just could be like this and die. Yeah. Oh, sorry.
Sorry, just a follow-up question. Is that kind of a culture within Calendly as well? Is there some mindset?
Yes. Yeah. I mean, I think in the beginning days, obviously, it was very enticing to have these conversations with, Fortune 100 companies, and we did, but in a lot of cases, we ended up saying no. And so we started to incorporate that into our culture, and we set boundaries, like I said, to say, we're going to say yes under certain circumstances. And so far, we've done a very good job of putting off those types of giant leaps, yeah.
My question eventually will show up there.
Okay.
At what point in the path to offering enterprise do you begin introducing human interaction directly into the sales cycle? Because growth tends to be the automated,
right,
self-serve as much as possible, but sales, customer success, all that has do that, is that ahead of enterprise? You kind of gauge where?
Yeah, it's ahead of enterprise. Yeah, I mean, for us, it looked like customer success getting on the phone with a different persona. They wanted to grow, right? Upon renewal, they say, okay, we did a really good job with 30 people. How can we bring in the sales team now? And then customer success is trying to figure out, well, what do you need? And then they'd say, okay, well, we need single sign-on, and we need this other thing, and we need this other thing. And customer success can't answer that, right? Because the product doesn't have it yet. And so, they'll bring in the product managers, and we'll have those conversations. And so it happens on its own. And I think that's important to start documenting or just looking at the leading indicators that will tell you that it's time to introduce a team, like a sales engineering team, that can help facilitate those conversations so that customer success doesn't have to be bombarded with those types of interactions.
So if I may follow up, so at that point then, you're not considering customer success to be, or their role to be part of the sales motion, or you are, they're just not maybe incentivized like a real sales.
It depends on your business model. I think for us, they're not sellers. They're not in the sales organization. They're definitely in the customer experience organization. So I don't think I would put them in the sales category. We have a separate arm that they work with to have sales conversations, and if they want to, have a discounting conversation, that's where they pivot. But mainly, our customer success managers are there to make sure that they use the product and they grow the product, but they're not trying to grow the product in a salesy way. Yeah. All right, so I don't know which ones of these are mine versus the other one.
The top one.
Oh, yours is the top one. Okay.
You should have good ones now.
Oh, okay. So tips to avoid the deal breaker trap. How do you convince sales to value sell instead of roadmap sale to sell? It's a very hard thing, and I think this is where it comes from. How you want to set up your relationship from product to sales. And for us, like I said, we created boundaries, and we explained those boundaries and how we made priority decisions to the sales team. And over time, they started to understand, okay, well, product isn't just going to make a decision on my customer. I need to log that feedback, and I need to tell my customer that I've logged it for you, but it's not something we support today. And so we've done that over and over and over again. And it's not going to, it might not be an overnight thing, but once you start to introduce a sales motion, start to have those conversations early. Like with anything in life, if you can set boundaries early, that's really going to be to your benefit. How much time do we have for other questions?
I mean, we can do maybe 2 or 3 more. Okay. We're coming up on a break, so I will just say if you want to head out, grab coffee, you guys are more than welcome, but we'll give you a few more minutes because
Sure.
honestly, I think you can add a lot of value for us. So.
Sure. All right. How do you account for higher services tech debt needs for enterprise customers? One strategy I've seen for handling these is creating a separate swim lane in your product roadmap for bespoke needs. So if there's a specific industry regulation you want to go after that's going to kind of or it's going to derail your product strategy, create a separate swim lane, allocate resources to it, don't touch it. That's one way of handling that. Other ways, creating if you're in a squad model, creating a specific squad for enterprise. We did that. It actually does help. It separates our core business from our enterprise business, similar to the swim lane model. And I'm sure there's other strategies too, but that's one that I think it will work pretty well for most. Should you go with launch partners, and how should you have without leading bespoke roadmaps? I'm not sure I understand that question. Can someone clarify that? No? When we say launch partner, what do you mean? No?
I'm thinking, if I'm going to guess, it's a big logo. It's a big logo associated that you can announce your.
Okay. Well, let me tell you something about about launch partners or large logos. Check your contract. They probably have written in there that you can't do that. So just be very careful about what you think is going to happen with them, and make sure it's available to you. And I think that's just one big thing that I would worry about. All right, what would you consider to be 1 or 2 top red flags that a company claims to be enterprise ready but clearly aren't? I think it's important to look at how they handle your data. Do they present themselves in, I guess most most SaaS products now have a security page, right? Make sure that compares with a leading SaaS product. I think, for example, if you look at like Miro or Figma, those are really good PLG products that have become enterprise ready. If you can compare that type of like security page with the company you're going after, you'll see a stark difference between what they support and what they don't. So if they're talking about how they protect your data, how they give you the control of the data, how you are able to manage people, and you have the ability to delete data on your own. Like, those are the types of things that I would see to make a product enterprise ready. So it's hard to say like one or two red flags. I would just say that if they're claiming that all they have is single sign-on in that enterprise plan, that's clearly not enough. So that would be a red flag for me. Okay. I think I saw someone's hand go up. Oh.
Thanks for that presentation.
Yeah.
On your final point number 2 with the boundaries, do you find that if you do a good enough job of setting those boundaries up front, the enforcement isn't actually that hard? Or if it is hard, do you have any like script success stories or like tips for enforcing after they've been set but when they get challenged?
It's probably multi-layered. When it's set and when we've actually been successful at it, it definitely is dependent on the person. Obviously, when you're incorporating sales-led into your PLG motion, you got to make sure you hire people that also understand the culture of the company. Don't just hire a salesperson out from maybe an enterprise product and they bring them in because they're going to operate the way that they operated in that other product. I worked at IBM for a very long time, so if I brought an IBM enterprise seller to Calendly, they would be a very different type of person I'd work with than the ones we have now. So I think hiring right is a very important thing too. But we have a multi-layer approach to satisfying those boundaries, and that's first we explain up front how we make those decisions, and that's the trust that we have with sales. And then we also have a escalation path to say that no product is getting, or no feature is getting out of the roadmap in a bespoke way without getting the CPO sign off. That way it removes the PM from that prioritization decision, kind of just pushes it up to the highest level. So I would say it's a hard thing to do, right? Setting those boundaries. I mean, again, in life, setting boundaries is hard. So just watch out for when those boundaries are pushed. And they will get pushed. I mean, we get pushed all the time because sales thinks it's easy and it's not. So you have to balance that. So anyway, all right, I think that's it. Thank you.